Now, the last time she was on the show, my next guest says, she said that nothing seemed to intimidate this market. I want to bring in MacroVisor's co-founder, Ayesha Tariq. And Ayesha, the headline in your market recap over the weekend was, can the market rally continue? Maybe a rhetorical question, but I'm going to ask you for the answer.
Hi, Charles. Thank you for having me back. As I said, there's no easy answer to this, but the truth is the current conditions do favor equities here. We think the U.S. economy remains relatively strong with wealth effects gaining ground. We're seeing a reflationary scenario, and with the Fed focused on cutting rates, just to reduce the cost of borrowing, we think that, it's a good, situation for equities to keep rallying. Right. We might see slight pullbacks here and there, but the rally will continue. I mean, the subtitle was thoughts, correlations are high. Lance and I just had a similar conversation. In your note, though, you mentioned there are three areas that you're cautious on three fronts. Yes, that's right. So with the economy being this strong, we are a little worried, and inflation being high as well, we are a little worried about, the curve steepening here and the longer term yields going up. In fact, that's precisely what we're seeing today in today's market action, where we're seeing the long end of the curve pull up the curve, even though the Fed is determined to cut rates. And when that happens, when the Fed actually starts cutting, we might see, the U.S. Treasury start issuing at the longer end of the curve, which will pull rates up even further. The other thing we're a little worried about is mega cap tech, where we're seeing some re-rating in earnings. And we think, it's gone from, the Max 7 to the terrific 2s here, and we might see some pullback in earnings over there. And finally, the AI trade. So we think the trade is still alive, but we think it will take time to broaden out because it is expensive and challenging to implement here.
So let's talk about some of the stock picks. I'm going to work from the bottom of the list. We only got a minute to go or so. But utilities, I'm liking utilities as well. They look really intriguing, act much better. What is it about utilities that are attractive for you here?
So that's right. I think, it's an interesting situation with utilities. It's more of a longer term trade over here because we're seeing advances in technology and manufacturing. So AI, all of these data centers, they all pull a lot of energy. They require a lot of energy, right? And so we think that there is demand for energy over here and consequently utilities.
Yeah, I happen to agree with you. Agnico, Eagle Mines, a gold mine stock here. Gold continues to move up. We know that the gold miners have been trailing gold tremendously. Listen, I've got a couple of gold miners that haven't done anything. They're starting to nudge a little bit higher. Now's the time to own these miners?
Yes, I think so. And Agnico is one of the better ones with, mines in tier 1 jurisdictions. They also have a relatively high stock beta, which means that, they have more upside when gold goes up.
Air Products, APD is another name you like, United Therapeutics. Go ahead.
Sorry. So Air Products is an energy transition play. They are the largest industrial gas company. And because of the IRA and the tax credits here, we think that they'll do well from, hydrogen here, blue and green hydrogen. They've already started a few plants in the US, and they also have a plant here in the Middle East.
All right. Let's leave it there. Ayesha, great work as usual. Love reading your pieces over the weekend. Thank you.